the channel where we break down the secrets to building wealth, and today, we're diving headfirst into the incredible world of dividend stocks. That's right, we're talking about getting paid just to own a piece of a company. Sounds pretty sweet, right? Now, if you're tired of the 9-to-5 grind and dreaming of generating passive income while you sleep, then you absolutely need to understand the power of dividend stocks. These bad boys can be your ticket to financial freedom, helping you build a steady stream of income without lifting a finger. But before you go diving into the market, there are a few things you need to know. Stick around as we uncover the ins and outs of dividend investing, explore the top 10 dividend stocks that should be on your radar, and show you how to build a dividend portfolio that generates serious cash flow. Make sure to hit that like button and subscribe so you don't miss out on future videos. Let's be real, who doesn't love the idea of earning money without actually working for it? That's the beauty of passive income. And dividend stocks are one of the most powerful tools in your arsenal to make it happen. Dividend stocks work like owning a rental property. You invest, and you get a share of the company's profits. These profits are paid out as dividends, usually on a quarterly basis. Every 3 months you get a deposit into your brokerage account just for being a shareholder. Dividend stocks provide income independent of the stock market's ups and downs. Reinvesting dividends compounds your money, buying more shares, and generating more dividends over time. Alright, now that you understand the why behind dividend stocks, let's break down the how. Don't worry, it's not as complicated as you might think. At its core, a dividend stock is simply a share of ownership in a company that pays out a portion of its profits to shareholders. Think of it like this. You and your friends pool your money together to buy a lemonade stand. Business is booming, and you're raking in the cash. Now, as co-owners, you have a decision to make. Do you reinvest all the profits back into the lemonade stand, maybe buy a fancy new juicer, or do you distribute some of those profits amongst yourselves? That, my friends, is essentially what a dividend is, a distribution of profits to the owners of the business. In the stock market, these distributions are typically paid out in cash, directly to your brokerage account. Now, not all companies pay dividends. Some companies, especially those in growth mode, prefer to reinvest all their profits back into the business to fuel expansion and innovation. Alright, let's talk about the good stuff, the benefits of adding dividend stocks to your investment mix. We've already touched on a few of these, but trust me, the advantages of dividend investing run deep. First and foremost, dividend stocks are like a steady stream of passive income flowing directly into your pocket. Whether you're saving for a down payment on a house, funding your dream vacation, or simply looking to supplement your income, those dividend checks can provide a welcome financial boost. But here's where it gets really interesting. Dividend stocks can actually help you build wealth faster through the power of compounding. Remember that snowball effect we talked about earlier? When you reinvest your dividends, you're essentially buying more shares, which generate even more dividends and so on. It's a virtuous cycle that can supercharge your returns over the long term. Now, let's talk about risk for a second. While no investment is entirely risk-free, dividend stocks tend to be less volatile than their non-dividend paying counterparts. That's because companies that consistently pay dividends are often more established, financially stable, and less susceptible to wild market swings. Now, before you go all in on dividend stocks, it's crucial to understand that no investment is without risk. While dividend stocks can be a fantastic addition to any portfolio, it's essential to be aware of the potential downsides before you hit that buy button. One of the biggest risks to be aware of is dividend cuts. Just because a company has a long history of paying dividends doesn't mean it's guaranteed to continue doing so forever. If a company experiences financial difficulties, it might be forced to reduce or even eliminate its dividend payments altogether. Another risk to consider is interest rate risk. When interest rates rise, investors often shift their money out of dividend stocks and into fixed income securities like bonds, which offer more attractive yields. This can put downward pressure on dividend stock prices. Ready to build your dividend-paying machine? Here's a quick guide to get you started. Step 1. Get your financial house in order. Pay off high-interest debt and build an emergency fund. Step 2. Choose your investment account wisely. Each account type has its own tax implications. Step 3. Do your research and select your dividend stocks. Look for companies with a solid track record and strong financials. Diversify across different sectors to reduce risk. Alright, now comes the exciting part. Choosing the dividend stocks that will form the foundation of your passive income empire. But with thousands of stocks to choose from, how do you separate the wheat from the chaff and identify the true dividend champions? First and foremost, look for companies with a proven track record of dividend payments. Ideally, you want to see a history of consistent dividend payments for at least 5 to 10 years, if not longer. This demonstrates a commitment to rewarding shareholders and a history of weathering economic storms. Next, pay close attention to the dividend payout ratio. This metric tells you what percentage of a company's earnings are being paid out as dividends. A payout ratio that's too high, say above 80 or 90%, could be a red flag, indicating that the company might not be able to sustain its current dividend payments. Another crucial factor to consider is dividend growth. Look for companies that have a history of increasing their dividends over time. This indicates that the company is performing well, generating strong earnings growth, and committed to sharing those profits with shareholders. Alright, let's talk about one of the most important metrics in the world of dividend investing, dividend yield. This little number can tell you a lot about a stock's potential to generate passive income, so listen up. In a nutshell, dividend yield is the annual dividend payment per share, expressed as a percentage of the stock's current market price. It's essentially a measure of how much cash flow you're getting for every dollar you invest. For example, let's say company XYZ is currently trading at $100 per share and pays an annual dividend of $4 per share. To calculate the dividend yield, you would divide the annual dividend, which is $4, by the stock price, which is $100, and multiply by 100%. In this case, the dividend yield would be 4%. Alright, let's talk about everyone's favorite topic, taxes. Now before you start sweating, the good news is that dividend income is generally taxed more favorably than ordinary income, but there are a few nuances you need to be aware of. In the United States, qualified dividends, which are dividends paid by U.S. corporations and certain foreign corporations that meet specific criteria, are taxed at the lower capital gains tax rates. These rates are typically lower than your ordinary income tax rates, especially if you've held the stock for longer than a year. Non-qualified dividends, on the other hand, are taxed as ordinary income. These typically include dividends from real estate investment trusts, REITs, master limited partnerships, MLPs, and certain foreign corporations. Now here's where things get interesting. The holding period matters. If you've held a dividend-paying stock for less than a year before receiving the dividend, those dividends will be taxed as short-term capital gains, which are taxed at your ordinary income tax rate. Alright, let's take a break from the technical stuff and dive into some inspiring real-life examples of how dividend investing can create lasting wealth. These stories prove that with patience, discipline, and the right strategy, you can build a passive income stream that sets you up for financial freedom. One of the most legendary dividend investors of all time is Warren Buffett. His company, Berkshire Hathaway, is renowned for its massive portfolio of dividend-paying stocks, which generate billions of dollars in passive income for the company each year. Buffett's philosophy of investing in high-quality businesses with a durable competitive advantage has allowed him to compound his wealth over decades, largely thanks to the power of dividends. Another inspiring example is that of Geraldine Weiss, known as the Grande Dame of dividends. Weiss started investing in the 1950s when women on Wall Street were a rarity. She developed a simple yet effective dividend-focused investment strategy that consistently outperformed the market and proved that you don't need a fancy Wall Street education to succeed in the stock market. Alright, the moment you've all been waiting for, my top 10 dividend stock picks to supercharge your passive income portfolio. But before we dive in, remember that this is not personalized financial advice. Number 1. Johnson & Johnson. This healthcare giant has increased its dividend for over 60 consecutive years. Number 2. Coca-Cola, another dividend king, with over 60 years of dividend growth. Number 3. Procter & Gamble. This consumer staples giant has increased its dividend for over 65 years. Number 4. Realty Income, AREIT, with 631 consecutive monthly dividends. Number 5. Main Street Capital, a high-yield powerhouse with consistent dividend growth. There you have it, the keys to unlocking the incredible world of dividend investing. Remember, building a passive income stream takes time, patience, and a solid strategy. But by focusing on high-quality companies with a history of dividend growth and a commitment to rewarding shareholders, you can set yourself up for financial freedom. Don't forget to like this video, subscribe to the channel for more wealth-building tips and tricks, and hit that notification bell so you never miss an upload, and be sure to let me know in the comments below what your favorite dividend stocks are, and why. Now go out there and start building your own dividend-paying machine.